Hey everyone, it's Josh from JoshLM Finance. All right, let's get right into it. Mark your calendars because on January 1st, 2026, Nigeria's entire tax system is getting a major shakeup. And I'm not talking about a few small tweaks here and there. This is a complete overhaul that's going to touch your salary, your investments, and even those little fees you pay at the bank. So the big question is, what does all of this actually mean for your wallet? Well, in this explainer, we are going to cut through all the jargon and give you a straightforward, practical breakdown of how these changes are really going to affect your money. Let's do this. So, what's behind this massive shift? Well, it's all coming from something called the new Nigeria Tax Act 2025. And its whole purpose is to basically drag the country's tax code into the modern age. And the government's stated goal here is honestly pretty simple. They want to make the tax system a whole lot easier to understand and use. The idea is to get more people to actually pay their taxes by ditching confusing rules and, those little frustrating fees that we all can't stand. For us, this means some new chances to save, but also, a few new things we're going to have to get used to. Okay, let's get to the part that I know affects pretty much everyone watching, your personal income tax. This is where you're going to see one of the biggest, most direct impacts of this new law. And this number right here, this is a huge win for millions of Nigerians. The first 800,000 naira you earn in a year is now going to be completely 100% tax-free. To put it simply, if you're a lower income earner, you are going to keep a much bigger piece of your paycheck. This is a massive, massive change. So you're probably asking, what about anything you earn over that 800,000 naira mark? Well, the old system is being tossed out, and in its place is a new progressive structure. This just means your income is taxed in different bands, and the rate goes up as you earn more. So, for example, the next chunk of your income might get taxed at 10%, the part after that at 15%, and it keeps going up to a cap of about 25%. The key thing to remember is that higher earners will pay a higher percentage, but for a lot of middle-income folks, your tax bill might actually stay the same or maybe even go down. Now let's switch gears and talk to the savers and investors out there. Your investments are definitely not being left out of these reforms, and the way your profits get taxed is also getting a bit of a makeover. All right, first, just a real quick refresher. Capital gains tax, or CGT, is simply the tax you pay on the profit you make when you sell something like stocks or property for more than you originally paid for it. Got it? Cool, because understanding that is key for what's coming next. Under these new rules, the rate you pay for capital gains tax is now linked directly to your personal income tax bracket. But, and listen up, this is the really crucial part, some key exemptions are still in place. So any gains you make from selling shares up to certain limits and the income from a lot of government bonds will still be tax-free. The message from the government here is pretty clear. They still want to encourage long-term, smart investing. Now for what I think is some universally good news. One of the clearest and most immediate benefits of this whole reform is the crackdown on a bunch of bank charges and levies. This is where you're going to feel a direct saving in your day-to-day life. So, which fees are getting the axe? Well, you can wave goodbye to the electronic money transfer levy, that stamp duty on your salary payments, and even stamp duties on a lot of investment documents. That means more of your salary actually lands in your bank account, and the cost of investing just got a little bit cheaper. And yep, that familiar 50 naira charge, it's on its way out. The 50 naira electronic money transfer levy is being scrapped, and so is that 50 naira fee for moving money between your own accounts at the same bank. Now, it might seem like a small amount, but believe me, for millions of Nigerians, these little savings are really going to add up. Okay, so with all of these changes and benefits comes some new responsibilities. These reforms are putting a much bigger spotlight on compliance, and there are a few things you absolutely have to know. So, what do you need to do to get ready? First up, your tax identification number, your TIN, is now non-negotiable. For many people, your national identification number, or NIN, is just going to automatically become your tax ID. Second, you've got to get comfortable with doing things digitally, because online tax filing is now the new standard. And third, start keeping good records now. Seriously, even if you fall into that tax-free bracket, good record. All right, let's zoom out and put all the pieces together. These tax reforms are a major shift in Nigeria's financial landscape, and it doesn't matter if you're an employee, an investor, or you own a business. It's really a mix of some welcome tax relief, lower banking costs, but also much stricter compliance. And this really brings us to the single most important takeaway from all of this. To make this new system work for you and not against you, Staying informed and planning ahead is going to be absolutely essential. You do not want these changes to catch you by surprise. Whew, this is a huge topic, and we've really just scratched the surface of the main highlights. If you found this breakdown useful, do me a favor and hit that subscribe button. Stay tuned for more clear, non-nonsense breakdowns right here from JoshLM Finance. Thanks for watching, and I'll catch you in the next one.